Welcome to A Canadian Investing in the U.S., a podcast and YouTube channel focused on Canadians buying real estate, with host Glenn Sutherland.
Welcome to another episode of A Canadian Investing in the U.S. This week, my guest is Kira Golden. Kira, you know what? Tell us a little bit about yourself.
Sure. I am a mom of two. Love to travel, love to spend time on the beach, really interested in work-life balance and creating passive wealth for people. I sort of semi-retired, if you will, in my 20s and then realized that what passive income means when you're 20 is very different from what passive income means when you're a mom of two. And so still out kind of building our portfolio and doing real estate deals.
Awesome. And maybe tell everybody where you are right now.
I live down in Puerto Rico, so I'm down in Puerto Rico.
Oh, you actually live there. I was thinking you were on vacation.
No, this is you're on my patio. Welcome to my, sorry, I had you all set up to catch the sunset over the ocean, but
yeah,
we'll have to do it next time.
You're an American and you live in Puerto Rico. Is there any complicated parts to doing that?
Oh, how much time do we have? The short answer is actually, compared to the alternatives, no.
Okay.
And yes, it's a cultural shift. You know, there's some adjustments. There's things, but I mean, really, the biggest challenges are things like getting organic produce. They're not really real estate related. Part of why I came here is because in 2006, I left the U.S. and I started investing overseas. And I was worried about the U.S. real estate economy. And quite frankly, I'm a little concerned again. So I was looking for another opportunity. And Puerto Rico is a nice hop from the U.S. because as a U.S. territory, there are a lot of things that are very similar. So it's not quite the same steep learning curve as like Costa Rica or France or Belize or some other places that people might be considering because it's just a very similar process to buying real estate. And it's, of course, for Americans, it's under the same U.S. tax code with some obviously I talked to an accountant, there's some nuance, but it's a little easier than going truly overseas.
Oh, okay, yeah, because I was like, for us, even going from Canada to the U.S., we need like an ITIN number because we don't have a social security number to put on like for applying for loans and stuff like that. So being a U.S. territory, you don't have to deal with that kind of thing, right?
Exactly, and for you and your audience, it would be the same thing. Once you've already set it up to buy a house in Alabama, you could buy a house in Puerto Rico. It's going to map right over. You don't have another learning curve.
You know what? That sounds excellent because I've figured out the rest stuff and my accountants all figured it out. So that's exciting. So tell us a little bit about what real estate is like in Puerto Rico. What do you expect and what is it? I'm completely blind. I've never even been to Puerto Rico. I've been to like islands and stuff around there, but I haven't actually put my foot on there.
Yeah, so you're like me in April of 2014 when I moved here. I'm like, all right, let's do this, But there was a learning curve, but I'm happy to say I could short circuit that for you guys. Quite frankly, so we had a big hurricane in 2017, and that was amazing for the island.
Oh.
So much opportunity, so much funding coming down, contractors are coming down, more tourism than we've seen in a long time. And so our vacation rental properties are getting more demand on the island than they have before. The other big thing, and gosh, I almost kind of feel like a jerk saying this, but no, not almost. I do feel like a jerk saying this. There are a lot of people who lost their homes. So what happened is the local banks, they gave like a 2-month grace period for people who were in the hurricane. They lost their jobs. They couldn't pay their mortgage. A lot of people are paycheck to paycheck. And so they gave them a grace period. But then my understanding is that pretty much across the board, after the 2 months, they expected them to catch up.
Oh.
So it wasn't like they just added 2 months on the end of the mortgage. It's like now all of a sudden you have a 3-month mortgage payment. So as you can imagine, a lot of people could never catch up. And the banks ended up taking back a lot of property, and I'm hoping and pretty certain that they've changed some of those policies and they've been working with people, or they would have gotten back like 90% of the island, But what it's done is it's created a glut of foreclosures and properties available to investors. And so we've been snagging those properties and and quite frankly, insurance has taken a long time to pay a lot of people. So by us taking back those properties and rehabbing them and then selling them all done, we actually think we're sort of helping people get back on track and get back into a home that's been repaired and in good condition and safe and secure to live in.
Awesome. So I guess you're looking more at like the single family homes, and you're not going to be looking at condos and short-term rentals, and it's sort of like homes for people who live there, right?
We're doing both. Like, so right now we actually have cash flowing vacation rentals that are available for investors, and that we rent out. We've got a management team that does that. And then we've just started doing the single family. So if you'd asked me before the hurricane, I would have said the only market down here is vacation rentals. Now I think there's two. I think you've got short-term fix and flips and good quality long-term buy and hold vacation rentals. And it doesn't hurt in the Canadian winter to hop on a plane and come down to the Caribbean and snorkeling. I mean, it was cold here today. I had to wear a jacket. It was 74.
I'm not giving you any sympathy for that. Anyway.
I didn't expect it.
Yeah. No snow though, eh? Yeah. Okay. Yeah. So interesting. It's very interesting. What kind of without even like I don't want to dig into like your numbers and stuff, but like can you make similar numbers to what if you're doing investing in the States, or do you have to sacrifice because of certain things?
No, so I would say it's bad. It is much better in general. I mean, there are some challenges. So let me talk about first some of the things that make it harder here. It's not a very liquid market. So if you buy something, you could end up holding on to it for a long time, unless like with the flips, you know that you're going to sell it for a lot less than market, so you can flip it fast. But if you're buying something at market, you're probably going to hold it for cash flow for a long time. There's just not a gluttony of buyers. There are more and more people coming down, and that traction's picking up. So I think it's the bottom, and I think it's the right time to be buying inventory. But I want people to go in eyes wide open. So that's one of the challenges here. The other challenge is their banking system, right? You're not going to get a lot of leverage. But despite all of that, the kinds of yields and returns I'm seeing down here are like what I was seeing in the U.S. in 2009, 2010, 2011. So it's like, we've ridden the wave in the States for 10 years. I feel like that thing's about to crash and burn, and if you're still surfing on that wave, sorry, sucker. What we've done is we've moved to another piece of the ocean, and those are just starting to crest.
Okay. And so you said that you're not going to get a good loan to value. What would you expect down there?
It really depends on your relationship with the bank. So, and so that's actually one of the things we try to do with investors from out of town is leverage our pre-existing banking relationship and make introductions and say, hey, here's an investor. We've qualified them as our buyer, and they're going to buy, X, Y, Z, and we'd like you to help us get financing. If you can get financing, there is 2%, 3% money down here, just like in Canada, as opposed to the 5, 6, 7s people are paying in the States. But the leverage, 50% is pretty standard. Okay. Some residential will get higher with FHA and HUD. You can get to 80%, 85%. Those are hard loans to get. I mean, I think, when we underwrite, we only assume levering at 50%. But that still creates phenomenal cash-on-cash returns.
Cool. And then what are the prices of these properties down there?
Yeah, so you could buy a house for $25,000.
Whoa.
Up through our penthouse units, which are like 30-something hundred square feet, 4 bedrooms, 3 baths, beautiful views of the ocean, would go for sub 4, 360 to 380. Okay. So there's a nice, I mean, for you guys, it'd be like a rounding error on one of your other deals.
So if you were like starting to invest down there, where would you start in like the 150s, the 100? Where would be a good spot to actually use as a rental that would be, presentable to that an American or a Canadian or whoever would want to like travel down there and stay at?
Yeah. It really depends so much on one's, personal liquidity and financial situation and all of that they need to kind of think through in their situation. Yeah. Having said that, I would say that generically speaking, my strategy is always start with a low threshold, right? So start at a $50,000 property that a lot of people could buy, because if it's not working for you, you want you want to be on the easier side of getting out of the deal, or if you can't get your money back, you want to be on the lower end. If that's working and the cash flow is really kicking off and you're doing great, then it doesn't hurt to upgrade to more expensive properties, because they're typically in nicer properties, and it's something you might actually want to come down and stay in and be in. So
awesome. And then are you typically looking at condos then, like where someone's taking care of part of it?
Yeah, so we have condos for sale right now, and that's what we really, really like, are condos. Like you said, it's a low-maintenance thing. Pay your HOA dues, let someone else deal with the headaches. But we have houses, and what we're in the process of doing is putting together a sort of a turnkey management process for that, so that it for the investor, it feels the same as owning a condo, right? You pay your turnkey fee, and there you go.
Okay, so like for turnkey, you guys would already have bought it, renovated it, put a tenant in it, or running it as a short-term rental, and be running the cleaning and whatever if it's a short-term rental. Like everything's all included?
Exactly.
See, that'll appeal to a lot of people, because then they can, it runs itself mostly. You always manage the manager, but runs itself.
Hey.
I do. I check all mine. I've caught my.
No, I'm kidding. Totally. Yeah.
I've caught my property management with just like rounding errors and little things here and there.
Man, yeah, you got to double check, and quite frankly, we love when people come down and visit us down in Puerto Rico. So come on down, check out your real estate, have a pina colada, go see where Columbus landed.
This is excellent. So, what else do I need? What questions am I missing asking? What do people need to know?
Send me the paperwork. I don't know.
Okay, so you're running a company too, right? So, maybe tell us a little bit about your company.
Yes. Yeah. So yeah, you hit the nail on the head. This is my exciting kind of pet project. I love this project, but realistically, what we've done for the last 5 years has been really focused on multifamily apartment complexes. So we're doing 200 unit to 400 unit in that kind of range, typically. Apartment buildings. So we've got a team, and really, you talked about managing the manager. I mean, that's essentially what I spend most of my time doing, is managing managers and making sure, just kind of double checking, being a backstop to make sure that everything's running smoothly.
Cool. I just thought of this. I'm just kind of jumping all over the place, but U.S. lenders, like if I had contacts with whatever, like a hard money lender or some sort of, online bank or stuff like that, would they, I guess it'd be bank to bank, but do they really lend in Puerto Rico, or is it sort of start over again with the Puerto Rico lenders?
Yeah, no, that's a great question. So I think it's part of why there's an opportunity. So if, I know a lot of Canadians came down to Phoenix, which is my home real estate market, and you guys were down there when it was illiquid, right? 2009, 7, 8, 9, 10, nobody was lending money. Even in the U.S., no one was lending money. Yep. And so it was cash is king, deal-making environment. That's Puerto Rico right now. The local banks are really your only option. There's not, I keep saying if I had the time, then I would create a hard money lending entity down here, because the yields are there and someone's got to just do it. And I'm sure it'll happen soon, just what I've seen happen. And I've seen this happen already a decade ago. So, I know how the pieces come together. Yeah. But there isn't a lot of liquidity. So it's an opportunity, definitely, for people who want to do private lending. I keep trying with my guys in the States, the institutional hard money lenders, the, Corvests and the Five Arches and and they're not. And I'll tell you what happened. A lot of those guys on other sides of their business got burned with Puerto Rico debt. A lot of people bought, I'm not saying those three in particular, but a lot of investors bought Puerto Rico bonds, and those have not worked out well for them. And so a lot of the debt side of the business is just like, we're not going down. And then also because of Puerto Rico's credit rating, it's, you can't get traditional debt because they can't securitize it and sell it. So you really just have bank balance sheet loans, and that's why leverage is lower. And that's why I also think private party lending would be exceptional and would do really well down here.
Excellent. Okay, so let's just jump the gun. I'm interested in this, and I'm like, I want to go buy some of these properties, because in all honesty, a lot of Canadians are going to the States even and buying at low leverage rates. I know it's very common to pay a 65% loan to value. So going 50% loan to value and getting into like tropical paradise is not, it may be like worth it, right? So let's talk. So do you have a website? Like can we go view properties? Like what's the best way to do this?
Yeah, honestly, the best thing to do is probably to, oh my God, I'm going to regret this. Email me. So it's Kira, Kira, just Kira, at directsourcewealth.com. Kira at directsourcewealth.com. And, we are in the process of launch. Like, you guys are literally the first to hear about this. Like, we're in the process of launching the website. We've been buying down here since 2014. But we've just been building our process, our system, making that all happen. We're just now really kind of opening it up. So there will be some information, but if you email me, I can get people on a list and then send it out when it's ready.
Awesome. I really appreciate all your time. I'm actually excited.
Hey, excitement.
Yeah, I love excitement. Yeah, I'm very interested to go at least take a look through some of the properties and see if they're going to match up, because I'm like, you know what, I was thinking about going into like South Florida or something, but I'm like, you know what, if it's the same barriers I have going to all the way to Puerto Rico and stuff, like, you know, why not? Right?
Yeah, no, absolutely. You'll get much better returns here. South Florida is so overbought. I was looking there first before I came down here, and this is good. So
thanks so much for coming on the show. I really appreciate your time. I know you're a busy person.
No worries. I appreciate your time too, and we'll see you down here in Puerto Rico.
That sounds awesome. All right. Thanks again, Kara.
Take care. Bye.
You just listened to episode 50, which means we are almost at the 1 year mark as I do a weekly show. I wanted to do something for the 1 year mark. So Joe Fairless, I talked to him, who was our guest on episode 18, and he has graciously donated a book, the best ever syndication book, a 4-part system for raising money and buying apartments. The reason you need this book, even if you go, I'm not sure I want to do apartment syndication, it will teach you nuts to bolts on how to do multifamily. So this isn't the one I'm giving away. This is my book. I personally have spent the money to buy this book, and I am a huge fan of Joe Fairless and his show. I subscribe to that show and contribute in his community on Facebook. Anyway, I'm going to be giving away the book. So in order to get a copy of this book, what you need to do is you need to send me an email, glenn@glennsutherland.com. In the subject line, just say 1 year. And in the actual subject of the email, if you could just say where you subscribe to the podcast. If you're Stitcher, if you're iTunes, if you're YouTube, if you watch it on LinkedIn, just so I get an idea where everyone's coming from. I will try to do the book giveaway on episode 52, but I might actually wait a little bit and give it away 54, 55, because it gives people a little bit of time to actually listen to the episodes, because I know there's a bit of a lag. Anyway, thank you everyone for tuning in. I appreciate all your time. Have a great week. Bye.